Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Wednesday the 11th of March. Let's have a look at sterling dollar now. What we've seen is a wild ride actually on sterling, I mean, even in the context of where we're sitting at the moment with volatility. The Bank of England rate cut, you would think that that would be pulling sterling lower. It did initially, fell around about sort of 50, 70 points. Or pips, I should say, to the downside initially, and then found support and rebounded quite strongly. 28.40 today's low, 120 pips above there now. So big turnaround on the day. Seems as though that the market is fairly supportive of this decision from the Bank of England. Anticipated and came a little bit sooner than expected, but seems as though that the bank has made a move that the market seems to suggest that there's not a great deal of further that they can do, and it's a fairly comprehensive set of measures it has enacted, given the funding and the rate cuts. So the market seems to have given it a bit of a thumbs up at the moment. So sterling is trading slightly higher. But if you, in the context of how the outlook for cable is, just you step back and you think, well, you're still trading in your range really on the medium term basis. I've been talking a lot in recent days about these Fibonacci levels, and they are really quite considerable in terms of their influence on sterling dollar. 23.6% at 32 figure, 38.2% figure Fibonacci at 130.10, and 50% at 28.55. All of those are having a say in the direction of sterling at the moment. Pretty much early morning this morning, 28.40, we'd say that 50% fib kicked in and then rebounded. So the 38.2% fib comes in again as the basis of resistance around 30 figure, just above there. And you see on the hourly chart how these old levels have played out again. 30.17, that's an old level of resistance. Again, came in as support, so you'd be suggesting that that is once more a level of resistance overhead. In terms of outlook on a near-term basis, rolling over that rally, you'd say that there is still an element of correction that is playing out, but given the fact that how the market has responded to this rate cut in the last couple of hours, the market has swung higher again. So if that hourly RSI gets back above 60, you'd say that that pretty much suggests that the market is trading it as the range again, and you're fairly middle of the road once more. So sort of running higher on the MACD lines, higher on the RSI, you're sort of taking on board that this reaction higher is a positive, obviously, for sterling on a near-term basis. But I think a failure underneath 130 figure would again bring 28.55 area back into focus once more. So just chopping around in this range really on sterling dollar, little real traction again. And I noted in the daily report that once again you saw that you had a run of a handful of sessions in one direction, and then the market starts to retrace again. That has happened so many times through the last 3 to 3.5 months actually, on sterling dollar, that it's an incredible move. So subsequently we're seeing that the market is mixed, I think, on sterling dollar at the moment, but within this medium term range. So I wish you good luck in your trading today. Click here to subscribe to our analysis of videos and go to our website to sign up for our webinars.